Hello, freedom. Hello, love. Hello, positive energy. Hello, life. Hello, disco. That's right. The beat goes on and on. Woo! And dance. The music. Oh, how you guys doing? What's going on? What's going on? Oh, how you guys doing? How you guys doing? Still the indecision in the financial market. I really do believe as an old trader, this is not the best trading environment. Some people think love these volatilities. I think they're newbies. I think if you like volatility that much, that means your analysis, you're not confident in your analysis all the time. And anyway, I'm not trying to bash anybody, but in this environment when fundamental news change everything, it's really better, from my point of view, to stay out, because the government policies should change and screw up your chart. And if you have the tools, you could always trade later. It's like, so it's okay. So what happened today? What happened today is the market sold off to the 50-day moving average. See, it just hit it right in the nail and bounced back up. Okay, so there's nothing called technical analysis, huh? These nice fund managers that believe in fundamentals. Oh, I love you guys, but what do you call this? Oh, Marona mia, these people. And so what happened today? It had a price rejection, a hammer, which needs confirmation. A positive open tomorrow will give us a good chance of going up. With you could set your your limits to an old price memory. You could sell at Feb retracement. I really didn't do it because I'm not gonna trade. So if I wanted to trade, I would just run a Fibonacci retracement from here to here and see where's the closest place where the buyers gather, and look at the 20-day moving averages. Suspect that somebody's gonna come there. The 10-day moving average, the old price memory here and there, the upper end of the Bollinger Band. See, I would do my own thing, but I don't trust the market now because of the fundamental news. So what's so noticeable about this picture right here? The convergence of the moving averages. The last time it was seen like this, the 50, 200, 20, 10, and also the 5, and the 100. 100 is right here. To have these convergences, the last time this happened was in December of 2015. And what happened after that? A total flush. A sell-off that lasted for 3 months. So, but it doesn't happen all the time. So almost, I don't know. So you do the math. Almost 5 years. Well, 5 years, give and take. So, and before that, it was 2011. And before that, I have to run it again. So this thing does not happen all the time. This guarantees a volatility to the upside or downside. It guarantees it. And the pipe formation for the Bollinger Band also guarees a volatility, because this is not gonna last forever. And the volume today was decent. It was not noticeable. It was just an okay volume like yesterday. The noticeable volume here is right here and here and here, what I call distribution days. This thing tells me that a lot of people they just went out. So that scares me more. I would call any up move a corrective move, because the trend is still down. High, lower high, This one is not confirmed yet, but if it's confirmed, you have three lower highs. So this is my assumption in conventional technical analysis to go to Elliott wave. So I'm going to repeat myself and sound like a moron. Okay, 5 waves down, A, 3 waves up, A, B, C, 5 for A, 3 for B, 5 for C, give us a B so far. So in 1, A, B, C, maybe 1, 2, maybe there's 3C coming up. We don't know yet. We have to wait. As I said before, usually what I noticed is a negative divergence gives me a major sell-off. So there was a negative divergence here. So we wait and see. So the same thing with the conventional technical analysis. So bearish on Elliott, bearish on conventional technical analysis. Even if you think about fundamental analysis and valuation, I understand that the PE changes from time to time, depends on the money supply, controlled by the central bank via interest rate hike or lowering the interest rate or quantitative easing tapering, or maybe negative interest rate like what they're suspecting right now. So okay, so the PE now is high because there's an expectation of negative PE. I understand that. So tell me, what if Joe Biden wins the election and cancels some of Trump's tax breaks? So you would have a reevaluation of the market. So how come it's not priced in yet? So to me, that's a risk. That's why I wait for November. This is a risk that will produce a violent move because the market is not pricing in yet. Democrats winning the White House. Okay, so the market's pricing in a negative interest rate. That's why you have a high PE. I understand that. I have a master in financial analysis, so I do understand that. So for the fundamentals out there, I know your game. So it's okay. So let's talk about the dollar. The dollar, according to Elliott wave, we are going through a conclusion of 2. So supposedly 1 here, A, B, C, 2, or some people call it B, and we're going through C. Some people call it 2. I call it 2, and we're going for 3. So in conclusion, every analytician is thinking about a total reversal in the dollar, which I really believe in. The RSI reading is the lowest for the last 20 years. Usually the market shoots up or down, even if the fundamentals is with it. They just overdo it. So sometimes when you overdo things, it reverses. So the market, you overdone it here, and what happened? The rest is history. So if you ask people here, everybody would tell you the market would go to 0. But what happened? The market rallied. And I was thinking about the rally. I posted that in LinkedIn, so I'm not lying. Hopefully you guys trust me anyway. So this is the VIX. The VIX, sometimes when you look at the downtrend, I'm not going to talk about the Elliott waves because obviously I'm bullish, so there's a bullish Elliott wave count. So let's talk about conventional technical analysis. So there is a low, and a low here. But in the MACD, you have a low here, higher low, and a higher low, almost a bullish crossover. Not yet. And you have almost a positive in the histograms. Not yet. So usually to know that the downtrend might end, when you look at the MACD histogram, when it's giving you almost a positive reading, yet price action is going down, and same as the MACD. So you know it's an exhaustion of the downtrend. And what happened after exhaustion? We know what happens. This happened here, boom. This happened here, boom. You know, it happened here. All exhaustions end up with an opposite trend. You know what I really want now? I really want a vacation. I really want to take a break. I want to dance in parks. I want to dance in the dark. I want to enjoy. Oh, God. And this is a beautiful disco song. There was a remake of a beautiful big band song, Dancing in the Dark. It's a beautiful, beautiful, classy disco song. Woo! Oh, I'm gonna be happy until the last breath of my life, and I'm gonna have a beautiful, beautiful life in the afterlife, and hopefully all of you. It's another transition, a better life than we have here, and our life is beautiful too. I love you guys. This goes forever.